Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. We are fired up this morning. There is a lot to discuss. We know about the earnings. We know that the airlines got their deal. We'll talk about that. We'll talk about Tesla. And we'll just talk overall market. And our guest at 8:35 is Eric Krull. He's with Krull Asset Management, also the author of the co-author of the Lifecycle trade. And he will talk about what these past few weeks have done for the IPO market and for the recent spate of IPOs for the past couple of years. So that'll be at 8:35. I will throw it to Joel. Joel, give us a quick update here on the overnight sessions.
Good morning, Spencer. Thank you for the introduction. S&Ps are down 52 handles at 27.91. We took a look at yesterday's high, which was 46 even, turned back at 45.5. A little bit of a decline. Your pre-market low is 27.8250. We're looking at a potential target here down at yesterday's Globex low, the real low at 27.52.5. Crude in the red here, whether you're looking at the June or the May. I'll go with the June. It's down 82 cents at 26.58. Gold having to retreat as well, down $16.60 to 17.5230. Silver been reacting a little bit more on the upside and the downside. Silver down 41 cents at 15.72. Bitcoin slipping a little bit again, now under 7,000. The futures are down $200 at 6,750. So a lot of great news to cover. Where would you like to start?
This is just, it's becoming more and more clear to me now that whatever I think the market should do, it's the opposite. Because you would think that the market would be up today based on the airline news alone. Right, Dennis?
Yeah.
That's what I would assume.
I would have automatically assumed that the market would be up too. I mean, this was the sweetheart of sweetheart deals for all these airlines, and we've got to start there because it literally, we talk about free money for everyone. While this is to the point of it almost is literally free money. I cannot believe the terms that these airlines are getting. This has got to be the most accommodating Fed in the history of Feds. I'm disgusted by it, to be honest, just that they're being this nice. Obviously it wasn't the airline's fault, but at the same time, you cannot just, give away the money. And they're literally giving away the money. Spencer Israel, give us the terms on this airline deals. They're taking the payrolls, getting them through September, it looks like. What the hell?
All right, $25 billion in direct aid to the major airlines. I'll break it down, if I can, by company. So Delta is receiving $5.4 billion in aid total. $1.6 billion of that 5.4 will have to be repaid in a low interest 10-year loan. So 1.6 out of the 5.4 has to be repaid. The rest does not. JetBlue.
What do you mean does not need to be repaid? Like, what does that mean? Who loans money to somebody?
Also, I should mention that the government's going to get warrants to buy about 1% of Delta
1%?
Yeah, at 24.
Why not 10%? Why not 20%? I mean, when the Fed, when it was Bernanke, we're looking back in the financial crisis, at least, they got some serious stock. There was some serious dilution. I mean, okay, yeah, it's not going to be huge because it's not a huge amount of money. It's, it's getting the payrolls through till September. Yeah. But who the hell loans money to somebody and doesn't expect repayment? The U.S. taxpayer, apparently.
I don't know what to do.
I pay U.S. taxes. Me. And, people think I don't pay U.S. tax. I do, because I work for U.S. I'm a prop trader for a U.S. company. So I pay U.S. taxes. And this is where my U.S. tax dollars are going.
Yeah. Okay. JetBlue is receiving $936 million. 685 of that is a grant. 251 million has to be repaid. That's a loan. American Airlines is receiving 5.8 billion. only 1.7 of that has to be repaid in a low interest loan. They said they're also going to apply separately for another loan from the Treasury. And Southwest expects to receive 3.2 billion, and 1 billion of that has to be. I'm sorry,
Spencer, you're making this up, right?
No, I'm not.
No,
1 billion.
Joel.
1 billion of that is an unsecured 10-year loan at low interest rates. It also includes 2.6 million warrants. So there's going to be some dilution there. So I mean, I don't even know I don't even know how to react to that. Like, as we're all taxpayers here, I mean, I just don't know what to do. I don't know how to react.
I cannot believe it. I'm at a loss for words. When I was reading this last night, I was like, well, you might as well go and buy Boeing right now, because they're going to get a sweetheart deal here too. I'm actually shocked.
Yeah.
The market's holding it down, but I almost think about going and putting Boeing in my portfolio right now, because if they're going to give away money like this, it means Boeing's going to get a sweetheart deal too. I would think. I cannot believe that they are literally giving away a huge amount of the money. It is an absolute joke.
It doesn't make any sense.
If you're the U.S. taxpayer, and we all are, and I know I live in Canada, but like I said, I pay U.S. taxes because I'm a prop trader for a U.S. company. So I pay U.S. taxes. This is where your money's going. This is absolutely ridiculous. It's ridiculous that they're just giving the money away. Like, you got to pay it back. I mean, a loan is a loan. You should not just be, not having to pay it back, first of all. And then they'll say, oh, well, we're getting warrants. For 1% of the stock?
That's just, that was just Delta. So.
And just Delta.
Yeah.
I
so
cannot believe it.
It's basically, it comes out to, this is just eyeballing
free money for every company out there.
It's 2/3 grant, 1/3 low interest loan is what it is, like the average.
The bottom line here is that this Fed is more concerned with the stock markets, keeping the stock market up, than it is about Main Street. It's more concerned about the stock market than anything else. We're going to not just bail out the airlines and keep them going, because, like I said, if you let them fail, they would have restructured. These airlines would not have went away. It would have been the shareholders that got burned. But, I think they should have let them fail and then let them restructure. I know it's not anybody's fault, but think about all the small businesses that are going to fail because of the situation that we're in. All of these small businesses are going to fail. That's why Amazon's ripping. Don't kid yourself. Amazon ripping higher because their competition from small business is going to be a lot less when we come out of this. Small business you're going to lose a lot of small businesses because, yes, they're doing some, trying to help them out to a certain extent, but it is likely not going to be enough for a lot of small businesses. And then you literally just give the money away. I guess when you're 23 or 24 trillion in debt, I guess it doesn't matter anymore. It's all fake money anyways. Nothing means anything. The hole's so deep, you're never getting out of it. So you might as well just keep digging it deeper and just free money for everyone. No, you don't have to pay us back, Delta. Don't worry about it. You're good. Come on.
And Dave, look, Dave in the YouTube chat just said it. You might as well just close your eyes, buy the stocks, and get your money back.
I mean,
you might as well. I don't know. I feel like going and buying all the airline stocks right now, because you know what? The situation they're in is not good. And they're going to need, don't kid yourself. This is not done. They're going to get to September and there's not going to be enough people flying. They're still going to be burning money. They're going to need more money. So this is not done. I do not believe this is going to be the last of the loans to the airlines. I think they're going to need more money. But whatever, if they're just giving it away, I guess they just give it away in September again too. So how do you not own them? I'm absolutely unbelievable by those terms. I've been talking about not owning the airlines because I figured that there's going to be some serious dilution if there's an involvement. 1% dilution is not serious dilution. The most accommodating Fed in the history of Feds. It loves the stock market. It will keep the stock market up at all costs, even at the taxpayer's expense. Unbelievable.
Yeah, and Dennison, we were talking before we came on here about the spin, the after-hour spin from the airline execs.
Well, this was the former
legendary.
CEO, so he's not a current exec.
Okay.
So the former CEO, do you have it in front of you, Spencer?
No, I don't.
The former CEO of Spirit Airlines comes on CNBC and says, this is good for the US taxpayer because all these airline employees aren't going to be filing for unemployment insurance. I was like, what a spin. What a spin. Oh, yes. Okay. So this free money that we're giving to all the airlines is good for the US taxpayer. Give me a break. Absolutely disgusted with the terms of this deal. This Fed does not know what the hell they're doing.
Man, our
People
chat,
who are running the Fed literally don't know what they're doing.
I'm sorry that I'm
saying
laughing. I'm sorry that I'm laughing, but I don't know how else to react. It is so unconscionable that I don't even know like what else to do. Our chat is more fired up than we are. I don't even know how to. I don't even know what to do.
I don't know what to say either. I feel like going to buy it. How do you get a better deal? How is Delta only up? How is Delta only up 4% on this deal?
I'm going all
but
in.
I'm not saying I don't. They're still in a real hurting situation. So I don't know what that means. September comes around, we're getting to election time. It depends how long we're in the lockdown for. If Trump, gets back in, which likelihood he probably will because a lot of Trump supporters. But Biden's up there now too. Who knows? You get to January, you get a new administration, potentially new Fed. I mean, some things could change. We're hopefully going to be out of this mess by January, but we don't know. Ontario is saying it's 18 to 24 months. They said 2022 we could be in, some social distancing for. That's what Ontario is saying. So obviously Ontario doesn't know, but nobody knows.
And also, Dennis, think about this: the airline execs, weren't they complaining like a few weeks ago?
How do they need money already?
What were they complaining about?
Money 3 weeks after this started.
Wait, but I weren't they saying like 2 weeks ago that the deal that they want a fair deal? What were they complaining about then? This is what they got.
This is an unbelievable deal. Unbelievable deal.
How what was the deal? What was the first deal they were offered? I mean, I don't know. This is just, it doesn't make any sense. I don't know how is this sustainable in any way, shape, or form. The only solution is to come in here and you're right, buy the airlines and buy Boeing and just assume that the Fed has all of every company's.
We're not going to let anything fail.
No.
Not under this Fed's watch. Nothing's going to fail. Why don't we just start bailing out all the little restaurants? We'll bail out all the little REITs. We'll bail everything out. I mean, what's just fake money anyways, right? Just fake money. What's the matter? Never paying that debt back. Interest rates are basically zero.
Can we move to Canada with you, Dennis?
Well, Canada's probably, I don't think Canada's in that much better shape. We have a serious deficit too. We're in a little bit better shape. I think per person, our debt is less, but it's still not good in Canada either. And we have an oil crisis in Canada. So don't kid yourself. We could move. Maybe this is a natural segue into the oil stocks, Joel, because oil is approaching the lows. Where are we on oil?
The June contract's down 84 cents at 26.56.
What is the low of the move?
The May is at 19.
Yeah. Well, the low.
Okay, so we're ways off the lows yet.
Yeah. It's the May low was 19 and a quarter. I don't have the June low for you there, but I'll let you know when we take it out later in the show.
Okay. Joel, you look disgusted in the background.
No.
Talk to me, Joel. I can just see the disgustedness in you.
No,
I mean,
no.
It's unbelievable how.
Let's do technical analysis on the airlines.
Okay, so
let's go back to the airlines.
Yeah, let's do technical analysis.
Okay,
let's go to Delta.
Okay,
DAL.
Delta is up $1.13, and it's worth 0. But
it's fundamentally worth nothing because they're burning $50 million a day. But we'll just keep, the U.S. taxpayer will keep footing that bill until they're not burning $50 million a day.
No, they're not. We hit a pre-market high over $27, and we're leaking right now. So the initial optimism. What time was it was announced last night, correct? So you got the pop last night.
Yeah.
Just after we popped big time on all the
just
airlines.
After the close. I saw it at like 4 o'clock.
Yeah, a little bit. It was 4.
Like 420, like 420.
But the terms we just saw that it came out with a headline that there's a deal. And then we didn't have terms yet. So, they weren't buying, they somewhat bought the airlines, but they weren't was ripping buying them because we didn't know the terms of the deal. Then the terms started coming out, and then they started really buying the airlines last night. They're pulling back here this morning from those highs
Sure.
because the overall market's pulling back. But I don't know. You look at Delta here, you got a hard bottom of $20. You got
Yeah,
the
there.
Fed completely got their back. I almost, it's a company that's burning $50 million a day. My CFA hat says, what the hell are you doing even thinking about buying something like that? But then my, Fed has my back hat says maybe I should buy Delta here at $25.50 because they're obviously not going to let it go under. They're obviously they're going to bail out the shareholders at, it looks like really sweetheart terms. So I don't know. It's a hard call because the company is burning a lot of cash and they're still in a world of hurt.
Okay. The lower the
Give me the
move is,
technicals.
we hit a high just over $27. So if you want to target on the upside, 27.17. We're kind of leaking here. Still green on the session here. I would just look at, if you're looking for potential support, I would look at the low from yesterday. We have not hit that yet at 23.83. That's a potential target. And then 22.08. And as Dennis mentioned, the low of the move is at $20, like right on the kisser. So if you're looking at the whole number theory, but I'm sure we won't see that today. Now they're low at 20.60. So if you're going this a swing trade, you think this is going back to $45 or $50, buying it at 25 here with a stop under 20, it's a very, very good risk reward ratio.
So looking across the board here, JetBlue up 7%, Hawaiian Airlines up 7%. The rest of them are all up around 4 to 5%. And they didn't even all get deals yet, but you had Spirit Airlines say, we're still talking, so we'll probably get a deal in the next couple of days. And I guess the next question is what happens in a few months when they need more money? I guess
That's where they're going to need more money because I'm going to tell you, even if we get out of this lockdown in May, forget it. People keep saying they're going to open in May. Whatever opens in May, we're not going back to normal. Josh Brown, we've had Josh on the show lots of times. Great segment he gave last night on CNBC. And Josh, if you're listening, I agree with you. He's just talking that, we're not going to just go back to normal even when this thing reopens. Like, what's going to be the new normal? People are going to be wearing masks everywhere. We're going to go to a restaurant and lift the mask to eat our food. I mean, there's a lot of issues still on the table here. So just to flat out think that we're just going right back to the way we were come May is absurd. Come June is absurd. Maybe next year at this time we'll be somewhat back to normal, I would hope. But who knows? Maybe we're never going to get back to the new normal. I mean, if we don't get rid of this, of the COVID altogether, there's always going to be a concern every season. This thing can mutate, even get a vaccine. You know how hard it is to make a vaccine for the normal influenza? So this thing can mutate too. There's a lot of unknowns here still. But with that being said, when the Fed has your back this much, it's hard not to own stocks. I'm definitely not shorting stocks. How do you short stocks here when the Fed is just going, the market's going to go down, the Fed is going to defend it? I mean, think about how many bullets they've already fired. And think about the, these loans, the terms. And yes, it wasn't the airline's fault. Buzz T's talking in the chat. Definitely wasn't the airline's fault, and you're shutting them down. So to a certain extent, this is obviously not their fault. But with that being said, if you're going to loan them money, you should still have to pay it back. There's a lot of execs making a hell of a lot of money still at these airlines.
And there should be at least some dilution. At least some dilution.
Some dilution for sure. 1% is no dilution. Yeah. So yes, but they didn't save a lot of money for a rainy day either. When you need money,
right?
3 weeks after this started, 3 weeks they were asking for money. 3 weeks after there's the people basically stopped flying. You couldn't make it 3 weeks. That's telling me you didn't save anything for a rainy day, and there should be some punishment in there. So I don't buy the fact that that they were just innocent on all this and they're a victim of the circumstances. Yes, they're a victim of the circumstances, but they didn't save any money for a rainy day.
Yeah,
and there should have been something saved. They were buying back stock. Just, we're just going to continue to have this cash flow. We don't need to save money for a rainy day. Hey, it rained. And you know what? You can't make it 3 weeks on your own. It's ridiculous. So
Yeah, I mean, the buybacks look really bad in hindsight. Obviously, we had no way of knowing at the time, and buybacks are rewarded by investors, and when used correctly, are a really great tool. But they look really bad in hindsight now.
here's Angie, baby. This is a good point. You know, it should sell off so the shares he bought back. Angie, baby, making this point in the pre-market Benzinga chat. The shares they bought back, shouldn't those shares go to the government? Maybe, you know, like, shouldn't we figure out how many shares he bought back? Because, you know, maybe you could look at it that way. And if you've bought back 3-4% of your float, maybe that's the dilution that should happen here. Because this was,
it's a good idea.
It is a good idea, Angie, baby. That's a good idea. So, you know, here we are, you know, we don't know anything about anything. Like, I mean, you know, we're not the Fed. We're not on these terms, but we can come up with some ideas pretty quickly too. Good chat. We have a great chat coming up with ideas. So, and jet fuel, Spencer's making a good point. Jet fuel is going to be cheaper. I mean, the jet fuel, their costs are going to go way down. Are they going to come out of this? And they're going to be stronger potentially a year from now because jet fuel is way down. You know, oil prices are down. They're getting a natural, you know, they're getting more money right there. So I don't buy the fact that, you know, they shouldn't pay back the loan. So if you're going to loan them money, it's one thing, loan them the money, but it should all be paid back. And 1% dilution is a joke.
And yes, to be fair, they're using this money to save jobs. This money will save jobs, but they're saving jobs they're saving jobs at the expense of like the rest of us. So I don't know. I really don't know what to say here.
I feel so sorry for the small, you know, and I work on Wall Street. I feel so sorry for Main Street here right now. I really do. You know, the person who's living paycheck to paycheck, blue collar worker, trying to feed his family and kids. He's going to get a check for $1,200 and he's going to go way more in debt on an individual basis, you know, from all these, you know, money that's being just thrown around here. You know, where is the $1,200 going to, you know, really get them? You know, it's going to buy them. Is it going to even buy them a month? Is that going to be enough? You know, $1,200. How long can you live on $1,200 when you got rent and you got food, mouths to feed? A few weeks.
Yeah.
What happens? Like, I mean, I would rather see everybody, if you're going to print money, I'd rather see everybody in the whole US just get that money as opposed to handing it out over here and bailing out speculators that are in the stocks. Because I don't think, you know, I think there's a better place for that. So, you know, I'm just so disappointed in how this deal was negotiated.
Yeah, it is kind of crazy. All right, I think we should move on here. There's a lot of other things to talk about. Let's go to I was going to go to the financials.
Oh yeah, well, we can do those too. They did report earnings.
Well, yeah. So, okay, we saw JP Morgan and Wells Fargo yesterday paint a very gloomy picture. A little bit more the same today. Bank of America out at like 6:45 or so this morning. Their EPS missed. Their sales beat. I don't know. Again, those don't really matter. It's more about just what they said about setting aside money for bad loans and that sort of thing. Goldman Sachs, kind of the same story. EPS missed, sales beat. What did Citigroup say? They were out just before 8 o'clock here. Citigroup beat and they beat, but they're painting a gloomy picture regardless. So they're all down here.
It's funny because Citigroup's numbers actually weren't that bad. So they don't want to own the banks at all. And everything we're seeing is been pretty good. You know, wow, you know, they're rallying on bad earnings. You know what? The banks got hit yesterday and they had tried to hold them up, but that was concerning yesterday. And that was a little bit of a tell. So I'm somewhat concerned if we start to show serious weakness in the banks, and these loan loss provisions that they're all raising up is telling you they know there's some bad loans coming their way. And you look at the numbers, the Citigroup numbers weren't bad. Look at Citi, $1.05 versus $1.04. They actually beat 20.7 billion versus 19 billion. That's right, they beat and they beat, did they not, Spencer?
They did.
And the stock's still trading down 3.5%. It tried to rally a little bit, but it's still trading down. So what's going on with the banks? I'll tell you what's going on. There's a lot of bad loans coming their way. And we're not completely out of the woods here on financial crisis part 2. I've said it before. But the banks are not really participating in this recent rally very well. They're participating somewhat, but when you look at it on a percentage basis, a lot of companies are back above their 50% retracement or back to it. Citigroup's move, $80 back in March, got down to 32. we're at 43. So I want to get $10 back of the 45-point loss. So relatively speaking, that's not good news. Wells Fargo, same story. $47 down to 25. We're at 29. The banks aren't participating very well. That's concerning because if the money and credit gets tight here, that is going to be very bad for the overall market. So the Fed could have to come in here too. So the Fed just throwing money around here. I'd save some money for a rainy day too, but I guess they're just printing free money anyway, so they don't
Also,
need to save.
it's worth pointing out, didn't JP Morgan say that a lot of the bad loans they're preparing for or in their retail banking division, i.e. credit, basically? Like how many people can't pay the credit card bill? Like Bank of America, Wells Fargo,
Holy mackerel, I never
JP
even thought
Morgan,
about that. Yeah,
Citi, like all these giant retail banks. How many people can't pay
yeah.
their credit card bills at their banks? So, Goldman Sachs is a bit less exposed to that than their peers, but yeah, I mean, it's definitely concerning, and I mean, the market is saying that here. Joel, thoughts on what's happening here this morning in the big three?
I will just I'll give the technicals on Citigroup, and it's trading just off the lows of the pre-market session. Your pre-market low stands at 43.50. I'll go to the dailies here. I'll give you some daily lows. You are looking at some daily lows. The next target on the downside for people that want to get long or a potential short cover, your 2-day low, or excuse me, your 4-day low is 41.97. So I would keep an eye on that. Maybe go out at 42 the first time down for a potential bounce. That's still a few bucks away. So they've kind of have ebbed the selling for right now. We'll see what happens if we take out that pre-market low. And as I mentioned, the pre-market low stands at 43.50.
And it goes back to what we were saying, I guess when this whole thing started, is you just don't know how exposed the banks are to anything, to oil, to
There's some,
bad
we know
loans.
how exposed they are. They are exposed.
Yeah,
Maybe not, oil
you
is
don't
more
know
of a
how
Canadian
exposed.
bank thing. And that's why the Canadian banks, some of them have really taken a licking here, but they're not, they've come back. The Canadian ones, like you can look at Bank of Nova Scotia, a lot of oil exposure there. It's went from $55, just looking at it here on the charts, down, and this has obviously got currency effects when you look at a US chart, but down to 32, back up, it's trading 39 this morning. It's off the lows, but there's a lot of, in the Canadian banks, there's a lot of oil exposure. There's bad oil loans come the Canadian banks' ways. There's no doubt about it. And I think Bank of Nova Scotia one's the most exposed. A lot of branches out in Alberta, which is probably ground zero for oil. But the US banks, there's a lot of potential sectors here that are in trouble. I mean, and we've talked about those. And, traditional retail is also in trouble too. I mean, you have companies that the stock market is so irrational right now. Like you just think about where we are. I mean, you have Estee Lauder that suspended their dividend today. I mean, EL suspended their dividend. So if we say, yeah, company suspending the next quarterly
I see
dividend
no
on Class
trades.
AB, says in recent weeks, many retail stores have been opening in Asia, but they're, obviously, in a situation too. Here's a stock that really hasn't even been hit that hard. You look at the beginning of March, and it was 190. It went down to 140. It's back at 165. But they're conserving cash too. It's a smart move. But you start seeing companies suspend dividends. It's companies that you're not even on your radar as really having trouble suspending the dividends. It's concerning. There's a lot of things to still be concerned about here. We've talked about those. Again, I'm not shorting the market because this Fed will just bail it out. So I don't know if that's going to drive us back to all-time highs either, though. So it's a very tricky market here, and that's why we're really in a battleground. You look at the S&Ps, we're in, a battleground here. We've been coming back. We're kicking around the 50% retracement. We can't really get it. So you've got a full battle between the bulls and the bears. The bull thesis is there's, we're going to be reopening. They're getting on top of the curve flattening. There's going to be a lot less people dying, and we're going to go back to normal here by the end of the year. The bear thesis is that this virus is not just going to go away, and it might just have another resurgence if we reopen, or potentially, in September come back. And it's going to be something that could be with us for a while, and that could spook, obviously, the consumer from going back to their normal spending habits. So
I
it's
would
a good
argue.
argument both ways.
I would argue the market is being rational. They're doing
Yep.
what they're
Yep.
being rational based on an irrational time, an irrational Fed. But we've been wondering what the hell? Why are they going? Why is it going up every day? Why does it go up? Well, now we know why. It's all good. It makes
Without the
sense.
Fed, yeah. Without the Fed,
It makes sense when you think about it with the Fed. It makes sense.
Without the Fed, the
Oh,
market being
we just got retail sales month over month from March down 8.7% versus down 8% estimate. So that number coming in below expectations here. The prior reading was down 0.5% month over month. So we not a surprise, but a bit worse than expected on the retail sales front for March.
Okay, S&Ps are drifting lower here. Down 69 handles at 27.74. Your pre-market low is at 27.7150. Have a target for the Globex low from yesterday at 27.5250. So we're about 20 handles away from that. And Dennis, you said maybe the market's being irrational, but I mean today it's looking at the news and what's going on, and the market's going, it's not green. So, maybe Mr. Market is,
I think it's irrational because it's not up. I mean, this is the best deals,
That's true.
Why are we down? What is the reason for being down? Like, what is the real reason? Because, you can say, oh, March retail sales were leaking a little bit here, but, let's be honest, minus 8.7 versus minus 8. I mean, we've been rallying on bad economic numbers now. Is it just buyer exhaustion? Is that where we're at?
You've had a great rally.
Oh, unbelievable rally.
Yeah, an unbelievable rally. You have 9 of your top components trading lower, right? So the market's trading based on how the stocks are doing. And come on. I mean, you got, Amazon's giving a little back, Microsoft is giving a little bit back, Apple's giving some back. So you have the top components of the index trading red. So that's why the index is red.
Tesla is down over the last 45 minutes, down $30. But how long can that last? Tesla has been a beast here. If I can just pivot to that,
Yeah.
a couple headlines on Tesla this morning. One, we're catching an initiation at Goldman Sachs at a buy, and Goldman's giving Tesla an $864 price target. The other headline is coming out of China here, that now that Tesla's Shanghai plant is back online, China registrations have jumped here for Tesla. They saw new car registrations jump 450% month over month in March, 12,000 versus 2,000. 12,000 in March versus 2,000 in February. So a lot of new cars being made and registered in China, plus the Goldman Sachs endorsement.
Yeah, that's a big upgrade.
Well, it's not an upgrade. It's
initiation.
An initiation. There's always a big difference between an upgrade and an initiation.
I'm
you can
sorry.
actually trade these things. But was Goldman not covering it for a bit? Like, because they did have coverage.
Surprised.
The analyst must have left or something, huh?
I was surprised as well. I think that either that
I know they covered it. They did cover it. So maybe what happens is when an analyst leaves the firm, then they have to suspend all coverage, and then they bring another analyst in to obviously start coverage on again. Do we know where Goldman was before?
Gosh,
the pro usually tracks that.
Yeah, but it's hard to see when an analyst leaves.
Well, we might just see their last move though. I'm just trying to go through.
Yeah, I'm taking a look. So
I know they did cover it.
I see Goldman.
Well, they had a sell on it back. Oh, they had a sell on it before. Yeah, they did.
Yeah, I think they.
Yeah, but that was all the way back in June.
Yeah, but they did have a sell on it at one time. So now that analyst may be gone, and they come back as a buy.
Yeah,
that's a big spin here for Goldman. That's why stock's trading up 26 points. I mean, it would be up a lot more if the market wasn't getting hit hard. Like this is up relative to the market. It's up 6% right now because the market's down 2.3%, and the beta on this thing is higher. So that's going to pull it down even more. I mean, we were up over 760 this morning, and we've come off those highs simply because the market is just not performing well at all here right now. So
Tesla can't be stopped. Joel, Pulpo Daily here.
Yeah, we are leaking though. I mean, we're off the pre-market high. and I will give you the pre-market high here at 762. You're just kind of falling back here a little bit, a gap up from yesterday. So you can use the top of the top of yesterday's range is 692.43. So we're still 40 bucks away from that. Where do we go off the board at yesterday? Went off the board at 709.89. So you can use that. What I would do for this one for your Tesla traders here, 741.88 was your high from yesterday. So use it. I mean, it gets, it takes that out during the regular session when the real liquidity comes in. Then I'd say giddy up and this rally's for real. And then we'll take a look at the pre-market high at 762 even. They actually hit that in 3 different 15-minute brackets this morning. So you got someone out there at 762. So there's your 2 levels on the upside, and I gave you a few levels on the downside.
Let's get Eric.
I'm trying to bring Eric on right now, and I don't know.
We had him earlier.
Yeah, no kidding. No, there's like a bug in the Zoom where I don't actually know if he's here. So give me 1 minute to find Eric. While I do that, do you guys want to look at like JB Hunt here from after the close yesterday?
Oh yeah, how did that do, Spencer?
Yeah, JBHT. We talked about that right at the 340 show. They were out at 405 yesterday. Their EPS 98 cents versus $1.01. Sales 2.28 versus 2.2 billion. So they came in pretty in line.
Yeah,
a slight miss on the EPS and a slight beat on the sales.
Yeah, we did talk about this one on the show at the close, and I was just I thought there's still a lot of trucks on the road delivering all these goods to grocery stores. Got hit on the decline with the other stocks. Someone got really excited in this, and they took it up to 106 even. Wowzer. That might have been a little bit of an overshoot. You're leaking here on the downside, just kind of at the lows at the morning session. I'm not sure if we're going to give this all back, but I will look at the top of yesterday's range, 99.51. We're $1.50 away from that as a potential support point. Under that, your close from yesterday was at 97.89, but the trucks are still on the road. They're delivering goods, and this is reflected here in the
hard
quarter,
to chase it. You got all those highs, 103, 102. We've been up over 100. We failed each time. You got the market down significantly here today, so it's a tough morning to be reporting. They're trying to hold it up. I don't know. I'm scared to buy. I'm scared to buy this one. And again, I don't like buying rips. I like buying dips. So in this case, I'm out. Let's look. Which one we did miss was UNH. We missed, and also Freya. Both of those reporting earnings. UNH reported, and it is trading up $4 here in the pre-market. It is almost back to the highs, like getting back the entire move. Basically V-bottomed, and it's kind of weird looking V, but pretty much V-bottom. 187 was a low. We're up almost 90 points from that low. Incredible comeback for UNH.
UNH, the numbers this morning, EPS of $3.72 versus a $3.64 estimate. Sales 64.4 billion versus 64.3 billion. So above the estimates by a smidge on the earnings and the revenue.
It's an impressive move. I mean, I don't know if I'm coming and buying it now. You look at all the overhead supply, you're going to come into between 280 and 300. I think if you're buying it now, I think you're late to the party. And I think the easy money's been made. So not interested here either.
You did get that nice pop there on the headline number. You went to 279 even. Dennis, you mentioned, that 280 to 283. I just got to believe there'd be some institutional sellers in that area. Since I think the high may be in this one, I'm going to look at the leak here. You just traded 274.15. You're currently at 275 even. Let's look at the top of yesterday's range. Top of yesterday's range is 273.07. So we'll look at that as a support point. And then also your close from yesterday, if they really decide to take thing the other way, 270.50 was your close from yesterday.
jump over to Freya. Give us the numbers here, Spencer, while you're trying to get Eric in the background. Sorry,
Ooh.
Eric, I know you're listening. We just can't get you in here for some
Yeah,
reason.
I'm not seeing him in the Zoom,
wonder
which
what
is
happened
really
there.
no, it's a Zoom bug. I'm not really sure. I see him, but I don't see him, if that makes sense.
Can't
Freya,
just bring him in. So he's sitting there idle.
You know
yeah,
what?
yeah.
You think it has something
Freya,
to do with
wait,
me?
what? No, it doesn't. Because he was here, we saw him earlier. So Afri, I'll give you these numbers here. Earnings per share 2 cents, up from a what is that? A 15-cent loss a year ago. Sales 107 million versus $55 million a year ago. So we know their sales have been increasing, but it's really about how much cash they have.
It's a nice pop. Every time Freya's rallied on a pop, it's been a selling opportunity. I see lots of overhead supply. I don't think you need to run into these things. Some of the pod stocks have held up fairly well. I mean, they've come back a long ways from the lows. You look at CGC, Canopy Growth, and it's got a nice little, almost like a little cup and handle ready to rock pattern here. So that's holding up. So be careful if you're shorting pod stocks here. Some of them actually look okay. Kronos has held up. We know Aurora Cannabis is a different story. That's just in a cash crunch, and we're not sure it's going to survive. I don't think Afria is in a cash crunch here, though, and the stock has held up fairly well. Again, I'm not buying any stock that's up 15%.
Sometimes the pre-market charts are all over the place, and sometimes they give you like a discernible pattern. And right now, there's somebody's out there at 450. These are the highs of your 15-minute brackets: 448, 448, 450, and 457, then 450. So, I would take a look there. You mop up that seller at 450. Greener skies ahead. No pun intended. Your next daily high on the charts comes in.
Pun a little intended.
You got a pair of high, actually a quad of highs, maybe more than that. But what's 5 quintuplet? You have a quintuplet of high.
Is
that right?
I think it's quintable, or is it
Quintable?
quintuplet?
That's what they say.
Quintable.
That's what they say in Canada. We haven't heard that in a while. If you can clear that 450 area, you do have 5 highs, whatever it is, at the 485 area.
All right, I got Eric to dial in here, so I'll bring him on now over the phone.
Okay.
Eric Krull is with Krull Asset Management. He's the co-author of the Lifecycle trade. Eric, thanks for bearing with us here.
You're welcome, and good morning from snowy Chicago.
Yeah, what's up with that? I saw
snow in April.
I saw frost out this morning. What's up with that?
Who knows? But we have like a 50-car pile up on the Kennedy Expressway, and it's totally shut down. It's just messed up traffic here, like you can't believe. Even though there's no traffic, it's still a mess.
Okay, so what is colder right now, Chicago or the IPO market? Because the IPO market's pretty damn cold.
Oh, the IPO market is frozen. It's colder than Chicago. When you look at the number of IPOs so far this year, they're down 20% from last year and 40% from the prior year. And they've only had 2 so far in April, and the rest of the April calendar is completely empty. Nobody wants to go public at this point.
Yeah, I wouldn't want to go public at this point here either. So who are the 2 that recently went public?
Well, if you show the next slide, you'll see that there were Zentalis. They work on small cell therapies for cancer, and then also Krull Pharmaceutical. Krull Pharmaceutical has actually done pretty well in the 4 or 5 days that it's been trading. Zentalis is kind of just staying hanging in a consolidation. It's just still trying to find some price discovery here. But Krull Therapeutics is also doing well. They work on, I think, red blood cell plasma and musculoskeletal type issues.
Well, I want to look ahead here a little bit. Some of the big names we were maybe hoping to see this year: Postmates, Airbnb is probably the biggest one, DoorDash. Safe to assume those are all off the table?
At least for now, especially Airbnb. They're the most interesting. They originally were looking at a valuation of about $50 billion. They actually went out to get more bonds sold. They sold high yield debt in the private equity market, and they're looking at paying 11 to 12% interest on that, and the valuation that came out of that is about $18 billion. So they've been cut way down. And, of course, given the way things are going with everybody staying home, who's using Airbnb, right? So it turned out to be just a terrible time for them to try to go public. And if you look at those other three I'd listed there, Toast, they do restaurant software, another bad time. They've laid off over half their employees. Vacasa, vacation home rentals like Airbnb, another, bad, time to go public. And Away, the people that make luggage. Well, we're not traveling. So here are three companies that not only will they not go public, all of them have laid off more than half their employees. They may not make it. These are companies that were thinking of going public. Now they may be going out of business.
But there are some companies filing, correct, for IPOs?
There are some companies filing. A lot of them that are filed in the last 30 days are biotechs. And I would like to say each of these are somehow involved with, infectious diseases, but they're not. Alea is a cancer type drug company. Lyra Therapeuticals and NLS Pharmaceuticals are involved with things like Alzheimer's and other type diseases. And then Oric Pharmaceuticals is also involved with cancer. So they may have good products. They may do well. They're not necessarily working with COVID or anything like that. But there are some IPOs in the biotech area coming out, and the rest is pretty much frozen up.
And I want to go to this next chart here, which is the meat of this, I think. Looking at the best performing IPOs from a couple years ago, or of the last couple years, essentially. And
Yes,
a lot of these, yes, Dennis just summed it up. A lot of these are COVID plays, Zoom. You see some biotech on there. You even see Peloton on there. So, talk us through these names and why you think they've outperformed the way they have.
You're exactly right. They, in some way or another, they are mostly related to the COVID crisis. Vir Biotechnology, that stock was actually up even twice of this amount. They're involved with fighting the drugs that fight viruses and infectious diseases. So, of course, they had if you look at their chart, a huge spike, and it's come down about halfway, but still doing well year to date. Zoom Video, which, of course, we tried to use this morning, but had a little bug. But everybody's using it, right? And so that's a play. It's coming back. It formed it had a nice IPO advance, came down, it undercut its IPO low, and then it started to form a base and come back up, and it's getting near its old high, which is a sign of strength. And that's the way IPOs typically act: have an advance, come back, undercut, and then eventually go on for a gain. Moderna. Their symbol, it says everything. It's a messenger RNA. They're heavily involved with trying to fight COVID by using RNA technology and sequencing. Schrödinger, they're a German company, and they are also involved with helping biotech companies and using technology to help them fight diseases. GSX, you're looking at education from home in China company. They got hit pretty hard after the Luckin Coffee disaster. They've kind of settled out, but who knows who trusts Chinese accounting at this point.
I have to say, I'm surprised to see GSX and Bilibili so high up this list for that reason.
Yeah. I mean, they got hit. They would be higher up the list, but they got hit pretty hard. Bilibili, they're like a company that does virtual reality and home gaming in China.
The home gaming aspect of Bilibili is probably a lot of the gaming stocks doing really well.
Yeah, NetEase is another one. I mean, and in China, it's a bigger thing than here. Although, given we have no sports right now in the United States, maybe it'll take off here. There's a lot of people who watch in stadiums, professional gamers play video games. It hasn't really picked up here, but who knows? We'll see what happens. Livongo Health, they do health monitoring. They're not necessarily a COVID play, but they actually work with cystic fibrosis and people with high blood pressure. And they have monitors that connect to your cell phone, and they alert you, your doctors alert you when you're having a problem. So it's very interesting technology. Chewy, hey, we're all staying home. People want food delivered. They want their dog food and their dog treats delivered. and Cloudflare, Zscaler. We're looking at companies that are with security, internet security. DocuSign, we all know what they do, documents through the internet. And then One Life Care, that was really like a stay-at-home healthcare slash like a subscription health service. And BioNTech, they also work with infectious diseases. And then, of course, CrowdStrike, they're also internet security. And then Peloton, which
Peloton. Let's talk Peloton here, Eric.
Yeah, maybe you could even pull up the chart. Peloton had an interesting debut. Peloton is another one of those companies that you think is going to just take off, and then it ran into some trouble, but now it's coming back. Many of the IPOs will do this. It had a nice IPO run, went above 36, and then came back way undercut its IPO low during the severe bear that we had. Went below $20 a share, and look at it now. It's back around $32 a share. So here's a company that maybe they got hurt by the bear, but at the same time, people started to realize their product is exactly what people need right now.
Yeah. I've been saying this is a COVID play, and I was actually long the stock for a bit, and I have the FIFO problem where I'm first in, first out, and I sold it, and now it's breaking out. I mean, I think there's room to 35 on this thing because this is now being seen as a COVID play, and stocks performed very well. And
as you guys were saying earlier in the show, who knows how long this will take? I heard you say something about Ontario. Maybe they're talking another 18 months. We really don't know, do we? I mean, unless we have some sort of plan to get out of this, this could go a while.
I mean, I think the worst case scenario, and I know a lot of people have talked about this in the media, is that we reopen too soon, and all of a sudden we start to get, human to human transmission again, and then the spread, and it continues, and obviously, then we kind of did all this for nothing. So I sure hope that they're not just going to open for the sake of opening. I hope that they're going to open when they think it's safe, that we're not going to continue the spread.
I agree. And hopefully we have educated minds all working together to find kind of an in-between state where we find ways we can open and start to get some things going, even though maybe the entire issue hasn't been solved yet. Somehow healthcare workers get close to COVID patients and try to stay safe with the kind of protective equipment. Maybe there's an in-between state where we start monitoring temperatures and people wear masks, and maybe that stops 90% of transmissions. Who knows?
Eric, have you observed anything with regards to how IPOs typically trade, or I guess recent IPOs typically trade during market downturns or even prolonged economic recessions?
I haven't studied that closely, but from when I looked at charts in the past, typical IPO action during recessions and also downturns is they react even worse. They correct more because for many of these IPOs, they don't have a big trading history, and people just get really nervous. So they're a little more volatile in general, and that's why they get hurt harder.
So if somebody wanted to come in here and try to pick bottoms, what sort of things would you look for on an individual company basis to try to identify the companies that have legs?
The first thing I would be looking for is, have they undercut the IPO low? And if they have they, after they cut the IPO low, have they started to go sideways and consolidated for 3 to 6 months? And if they consolidate for 3 to 6 months and they get like a 20 to 30% uptrend after that low, and then go sideways again and then break out in heavy volume, that's what I'd look for. So I want to see it undercut of the IPO low. I want to see a nice consolidation, 3 to 6 months, maybe longer, and then a nice uptrend, and then a breakout.
So you want to see them go the IPO. That's interesting. Joel.
Quick question for you here, Eric. How much is this going to weigh on the banking sector, right? I mean, a lot of the money is, some of their income comes from, IPOs, promotions, distribution of the stock and stuff. I mean, we see other things ailing the banking sector right now. Just the overall, a big impact, negligible impact. of the, less IPOs or, less brouhaha surrounding them. You think, is that something that would be another negative for the banking sector, or do you think it's just kind of like a small percentage?
Well, it of course depends on the investment banking firm and what percent of their revenue came from, private, from placements. So some of the biggest ones, Goldman Sachs and Morgan Stanley, they'll be hurt more than some of the others. But I think their bigger issue is going to be credit defaults. I mean, you're looking at consumers defaulting, a lot of businesses are going to be defaulting. I think this will be a smaller effect. It's certainly a negative, but it would depend on how much of their revenue comes from, investment banking work with IPOs.
Got it. And Eric, any other recent IPOs that are sort of on your radar here, or at least like that you're paying closer attention to and watching for a potential breakout, or some that are moving on to the quote unquote advanced phase?
I would say the ones that are the ones I'm most interested in right now are Zoom Media, Peloton, and this Avalara. Avalara is a little bit, they've been around for about a year and a half. They haven't been doing well lately, but they do.
Well, what's the ticker on that?
AVLR.
Okay.
They do work and help businesses with taxes. And you can imagine the 50 different states have different rules, and some local cities also have rules, and they update their software to help companies do taxes online. And they've had a pretty good run. That's more of a short-term chart there, but on a weekly basis, they've had a pretty good run. So then DocuSign, I'd say those top 15 that I showed in that one list are the main ones, plus Avalara. And, we'll see. Those are the ones that are on top of my radar.
All right, Eric Krull is with Krull Asset Management. He's also the co-author of the Lifecycle Trade. Eric, thanks so much for the time today, and keep on staying safe wherever you are.
Well, thank you very much, and you guys keep safe too.
All
Thanks,
right.
Eric.
Thanks, Eric.
We'll
All
see
right.
you.
8:57 here now, guys. Couple minutes left in the show. Any thoughts on how we've progressed throughout the hour?
We just keep leaking.
Yeah, yep, I agree. I agree with Dennis on that. We've just kind of just like a slow leak here. Someone mentioned Boeing. Boeing has gone to the red. Tesla's still holding up nicely, as well as Delta and American Airlines are still firmly in the green. You hit a pre-market low of 27.56. I'll be keeping an eye on that. Yesterday's low in the overnight session was 27.52.5. So there's a potential target on the downside for you.
I mean, let's look at the airlines coming back in here now. Maybe they're just looking, the market is looking and saying, okay, well, yeah, the terms are awesome, but that's going to get you to, maybe get your payroll till September. You're still burning cash. You still got major problems here. So we're not just going to dive in. That's why, I'm hesitant to dive in too, even though I look at this and think, man, if their Fed's going to have their back like this, maybe I should just dive in. So I'm very torn on whether to get down dirty in the airlines or not. I kind of want to get down dirty in Boeing too, just because I think Boeing's going to get a sweetheart deal as well. But, my overall market weakness here is bringing everything down. So Boeing,
hey Dennis, we got a new listener. We got a new listener in the YouTube chat, and he's asking your thoughts on two stocks, and then we'll wrap it up. I know we only got a minute here. Autodesk and Splunk.
I mean, these are the kind of companies that, the cloud obviously is the growth area for tech. Some of the cloud stocks, I own Workday. Some of them have done, have come back a long ways here. So you look, I think I would be more of a buyer on pullbacks on everything, but I'd like, these are kind of stocks that I would like to own going forward. So they would be on my wish list. Again, I want a significant pullback in these stocks because you're paying pretty extreme valuations in most of the cloud names. And I think you get another chance lower. I mean, Autodesk had a nice consolidation down at 140, gets back to 160. Where it broke out from here recently, then that's an interesting area. SPLK, same story, just recently breaking out, gets down to the 120 area again. It gets interesting. So do you get that pullback? I think you eventually do. I mean, we're getting a little bit of a pullback here this morning, but I'm not chasing stocks, and that's it. I bought a few stocks on the pullback. you know, on some recent pullbacks here, but I'm not chasing. Am I going to buy some pullbacks today as stocks on pullbacks today? I think we've gone too far. So that's why, you know, I'd love to get back down. You get down 260, 265 SPY, that's where I start to get interested again. But when you're kicking most of these stocks back up to their 50% retracements,
There
or in
you
like the
go.
case of a Wingstop that got all of the
Oh,
losses
man.
back, I mean, that's unbelievable move. Now you're buying it. It's like you're late to the party.
Yeah, I think with both those stocks, if you want to just, my kind of rule of thumb would be if you want to buy something like this, of course, it's had a nice move off the lows. Maybe wait to see if you get a reach. I mean, Autodesk, I'm looking at the run from what 130 and change to 172. Maybe get a couple days of a pullback, maybe to the 50% area, or like a consolidation. And this has had a couple up days in a row, maybe a little consolidation. And then if you want to buy it on strength, the breakout of the consolidation period. Splunk, haven't looked at that in a long time. That had a nice run off its lows. Looking at it just purely technical here. SPLK. Nice run as well. Wow, from under $100 to 133. Maybe this comes back into the 115, 120 area. Maybe you're looking at a lower, a lower risk long. But always after big moves and something like this, you want to wait for some consolidation and then a move out of the consolidation period.
All right, I want to thank our guest, Eric Krull. Thanks to all of you who participated in our chats, both on YouTube and premarket.benzinga.com. Get for a free 2-week trial and a subsequent discount to Benzinga Pro. It's our real-time news platform. Click on the link in the description of this video. Joel and I will be back with you at 3:40. In the meantime, please remember all the information from this broadcast is meant to be used as informational purposes, not for investing or trading advice. Everyone have a great rest of your day. Be safe out there. We'll talk to you this afternoon.